Hi there, thanks for dialing in. We'll kick off the webinar shortly. We'll probably just give it another minute and I'll come straight back to you while we wait for others to dial in. Thank you. Welcome and thanks for all joining us today for our webinar, the 2017 Hays Salary Guide, Salary and Recruitment Trends Across the Accountancy and Finance Industry. Just to introduce myself, my name is David Cawley. I'm Regional Director of Hays in New South Wales and Head of Accountancy and Finance in Australia and New Zealand. Before we start, if you have any questions or technical issues, please use the chat or questions function you see at the right of your screen. At the end, we'll have some time for Q&A, but I'm not sure if it will be able to get through all of your questions. So if we haven't, please feel free to send me an email, which is david.cawley, C-A-W-L-E-Y, @hays.com.au, and we'll get back to you as soon as possible. If you want to tweet about the webinar, please use hashtag HaysSalaryGuide, one word. You'll receive today's presentation in a separate email, which will be following today's webinar. So a bit about the guide. We've been producing our annual Hays Salary Guide for employers in Australia and New Zealand for over 39 years now. In it, we deliver a huge range of insights, and while we can't cover all of the findings in the time we have today, copies of our guide are available online. So if you haven't already got one, please make sure you visit hays.com.au/salary-guide. As part of our Hays Salary Guide this year, we surveyed more than 2,950 organisations, and they represented over 3 million employees. We asked them for their views on salary policy, hiring intentions, and recruitment trends. These employers have a positive outlook and will increase their headcount, yet they remain cautious on the salary front. We'll take a look at that a bit more closely in a few minutes' time. First of all, we'll look at some of the recent headlines. As we know, negative headlines receive more clicks than positive. So while we could be forgiven for thinking the worst about our job market with such mixed headlines, our survey of employers paints a very different picture. It shows that headcounts, business activity, and the general economic outlook are all expected to increase positively. You'd expect this to have a positive impact on salaries, but as you'll see, that's not yet the case. Recent headlines around accountancy and finance show skill sets around digital and technology such as artificial intelligence, cybersecurity, fintech, and machine learning are in high demand, and we foresee this only increasing in the year ahead. We'll talk about this in a bit more detail later on during the webinar when discussing current skills in demand and how recent studies we have conducted within the accountancy and finance industry might help you. Now over to a snapshot of the market. The Australian accountancy and finance recruitment market has remained strong since the resurgence witnessed back in early 2015. Naturally, localised conditions in individual states dictate this rate of demand. Permanent appointments have remained consistent. However, temporary and contract roles have increased and become the new normal. This has triggered a refreshing openness from organisations, both SME and large multinationals, to employ candidates on a temporary or contract basis. It is in this area we are seeing the highest current rate of demand. As many traditional finance roles evolve and blur the boundaries between finance and IT, the need for data analysis and data-led decision-making is driving demand for finance professionals with these skills. Companies focused on change and transformation projects are another driver behind the demand. According to our survey, business activity increased for 70% of employers in the past 12 months, while 3/4 of those expected to increase in the coming 12 months. If we look at it by industry, we see the highest expectations are in IT and telecommunications, where 88% of employers say business activity will increase. This is followed by retail on 81% and manufacturing and financial services both 79%. So good news for our industry in the year ahead. Let's now have a look at headcount expectations for the year coming. Such positive sentiment from employers helps account for expected headcount increases for the coming year. 45% of employers expect to increase permanent staff levels, and that's far exceeding the 11% who say they'll decrease. This is more positive than the year that was, when 42% of employers increased permanent headcount and 20% actually decreased it. This 42% increase is slightly above the initial expectations of employers. This time last year, a slightly lower 40% said they planned to increase permanent staff levels. This suggests confidence grew in order to allow for higher than planned permanent headcount growth. In the last year, the marketing department saw the greatest rise, and that was with 49% of employers increasing permanent staff levels in that team. This year, the operational management department will lead the job charge, with 56% of employers planning to increase permanent staff levels in this area. This is followed by engineering at 51% and project management at 49%. Temporary and contract staff are certainly becoming the new normal, and we've seen that in workplaces over recent years. In fact, 23% of employers say they now employ temporary or contract staff on a regular ongoing basis, with another 44% employing them for special projects or additional workloads. In the next 12 months, 23% expect to increase their use of temporary and contract staff. This exceeds the 9% who anticipate decreasing in this area. The increase will be greatest in IT departments, where 37% of employers will increase their use of temps or contractors. I'll talk about contracting and the developments a little bit later on in today's session. The use of temporary and contract staff will also rise in 32% of project management and purchasing procurement departments, 30% of marketing departments, and 28% of engineering departments. So we'll now take a look at salary expectations for the year ahead. Despite increasing headcounts and rising skill shortages, a cautious approach to salary increases prevails and continues the trend we've seen over recent years of smaller salary increases. In fact, most Australian professionals are in for a sedate pay rise of sub 3%. 65% of employers told us they'll increase salaries by less than 3%, while 11% intend to make no salary increases in their next review. The latter is lower than the 16% who made no increases at all when they last reviewed salaries, but there are also more employers increasing at the lower sub 3% level this year. Just 19% of employers intend to award a salary increase of between 3 and 6%. Meanwhile, a small 5% of employers say they'll offer salary increases of more than 6%. That's down from the 7% who said they increased to this level in their last review. When we asked this question last year, only 4% of employers said they intended to increase salaries above 6%. However, 7% ended up increasing at this level, so perhaps intentions are again more cautious than reality. Time will tell. In terms of industry-specific trends, we see there's an intention under almost a quarter of surveyed employers in the financial service industry to increase salaries with 3% or more. Only 3% expect to increase salaries by 6% or more, and this is slightly below the average across all industries. Now let's look at some salary movements for the year ahead we foresee happening. First movers remain in short supply, with finance managers and finance controllers witnessing the largest salary increases. With organisations gearing more and more towards automation to strengthen management reporting, analysts that sit between finance and IT offer the ideal skill set. As noted, demand for permanent candidates continues at a steady pace, and those with in-demand skills are benefiting from counter-offers, salary increases, and interesting development opportunities. Public sector bodies have continued to engage private sector candidates, welcoming their diverse outlook and experience. More organisations are establishing robust succession plans, which is leading to rising demand for business services and audit managers. These are traditionally candidate-short areas, as many at this level step into a commercial role or start their own practice. As a result of demand and supply, firms continue to offer competitive salaries to help attract proven candidates, and this is leading to generous salary increases. We continue to witness strong demand in most accounting support areas, and that's most prevalent in payroll and credit control. Competition for candidates with specific system or sector experience is high, with employers offering increased salaries and enticing benefits to secure talent. In fact, it's not uncommon for highly sought-after candidates to receive double-digit percentage salary increases. With sedate salary growth ahead, many Australian, New Zealand skilled professionals are in for a bit of a shock. For some, it will be a good surprise, since 27% don't expect any salary increase in their next review, and that's far above the 11% of employers who say they will not offer a salary increase. But a significant proportion of the 14% who expect to receive an increase above 6% will clearly be disappointed. This disappointment will no doubt be similar to that experienced by the 15% of people who asked for a pay rise last year, but that rise was declined. But a further 17% asked for a pay rise and were successful, which perhaps explains why 45% say they intend to ask for a pay rise in their next review. A further 27% at this point are still yet unsure. Now, we've seen earlier that only a small group of employers in accountancy and finance, so actually 3%, are willing to increase salaries by 6% or more. When we asked candidates, 16% told us they expect an increase of 6% or more, showing there is a big gap in what staff are expecting and organisations are actually willing to pay. Meanwhile, the importance of continuous upskilling has emerged as an essential requirement in response to rapid technological advances, which are and will continue to change the competencies required to do our jobs. After all, the fourth industrial revolution now beckons. It is expected to bring with it a huge leap forward in how robotics and AI are used within the workplace, across all industries and sectors, and as a result, an even greater need for continuous skills development in order to stay relevant in today's job market. For their part, job seekers are responding by investing in their own skills and looking for a role that offers learning and development and career progression. In a number of research studies we've conducted over the last few years, we've seen the growing importance of employees working in accountancy and finance being digital savvy. When we launched the DNA of a CFO in 2014, for which we interviewed more than 500 finance leaders across the region, they did not particularly have this on their radar. Though in more recent studies we see this popping up as one of the major challenges when looking for staff or upskilling themselves. Later this year, we will launch our report, What's Challenging Today's Finance Leaders, for which we've spoken to around 400 finance leaders in April to June of this year. We can already reveal that adopting new technologies is their #1 business challenge for the next 12 months. In August, we have our Group Finance Director from our London office in Sydney to discuss the issue of cyber security. So we see more and more within our industry is around technology, cyber security, big data, and the influence of ICT on the finance profession. Another hot topic is work-life balance. Turning to benefits, the number one benefit employees are looking for are flexible work practices, which 86% of employees say is important to them when looking for a new job, and 80% of organisations say they actually offer already. Of the workplaces that allow for flexible work practices, 76% offer flexible working hours, 75% offer part-time employment, and 64% offer flex place options. Apart from flexible work practices, job seekers rate career progression opportunities as important, alongside ongoing learning and development, but employers might not always offer them, as only 43% say they receive career progression opportunities and 58% say they receive ongoing learning and development. When thinking about their career in the year ahead, 60% said being able to work flexibly was most important, while 60% also said that a pay rise was equally important to them. 54% want more challenging or exciting work, 53% want support from their boss, and 47% want to learn additional digital skills. Now, when there's no room to negotiate for salary, you can negotiate for more flexible working hours, though that might be difficult in our industry. So maybe negotiate for a more exciting project or to learn additional digital skills to develop your own personal portfolio. Turning to benefits, 71% of employers said their company offers flexible salary packaging. Of these, the most common benefits offered to all employees are salary sacrifice, and that's offered to all employees by 57% of employers. Above mandatory superannuation at 41%, parking at 32%, private health insurance at 30%, and bonuses of 28%. Of the salary packaging offered to a select few employees, the most common are private expenses, private health insurance, a car, above mandatory superannuation, parking, and bonuses. Meanwhile, 70% of employees have access to flexible work practices. 58% receive ongoing learning and development, 43% career progression opportunities, 37% health and wellness programs, and 29% receive over 20 days annual leave and financial support for study. You can download a copy of our guide and see how you compare. I'd like to turn now to some of the key drivers behind today's increasing headcount and growing shortage of highly skilled professionals. I'll start with the rapid growth of digital jobs before moving on to accountancy and finance skills. It seems that almost every day we're reading headlines of the demand for digital professionals or the top digital skills that will be needed in the future. The term digital has certainly been used extensively over the past year, but while it often refers to technology, it's the practical usage of it which has been the driving force of jobs activity. That's why the impact of digital can be seen not only in IT and marketing jobs, but also in today's sales, customer service, and accountancy and finance jobs, since many of the services offered and skills required to offer them rely increasingly on technology. Sales is a prime example. Technology has allowed us all to become more connected. This presents opportunities for salespeople to take advantage of expanding networks and use data analytics to reveal existing or potential customers. Similarly, customer service is adapting as organizations have more customer touch points and increasingly turn their focus to the customer service experience. Crucially, technology allows an organization to support customers based on that customer's preferences, whether that's talking to somebody over the phone, online via instant messaging, or self-service through a mobile app. Thanks to new speech recognition technology, an electronic customer service concierge that exists with your issue and predicts your needs could be next on the horizon. The accountancy and finance sector has also seen significant changes thanks to digital technology, particularly accountancy firms. From analytical tools in tax software to identify anomalies in data, to the use of big data for new insights to help client businesses, and even the automation of transaction and compliance work. New digital technology is certainly having a huge impact. Of course, the impact on IT and marketing jobs has also been enormous. The ongoing convergence of IT into marketing and finance has driven up demand for commercially minded technology professionals. As companies look to shift the way they interact with clients and customers, they're needing to address internal challenges, and professionals who can effectively influence change are very highly regarded. Technology delivers specialists with technical skills as well as an agile approach, who are quick to shift and react efficiently, are in particularly high demand. We expect hiring intentions across IT will remain high, and that will especially be for IT contractors. As we saw earlier, in the next 12 months, the increase in the use of temporary and contract staff will be greatest in IT departments. I also mentioned before that marketing departments were at the front of those where organisations increased permanent headcounts over the past year. I'm sure it's no surprise that digital marketing capabilities continue to be in high demand, and we've seen employers, employees, contractors, temporary staff and freelancers alike extremely active. Ongoing accessibility pressures, customer centricity requirements, and the changing technology landscape will ensure that digital, both IT and marketing, remain at the forefront of many organisations over the year ahead. Long term, we can expect jobs in all sectors to undergo change as organisations look to harness technology to run and organise their business and to dictate where and how to engage with their customers. According to the Department of Foreign Affairs and Trade, the services sector represents about 70% of Australia's GDP and employs 4 in 5 Australians. Services include professional services, education and tourism, financial services, energy and mining-related services, environmental services, and finance technology. The AI Group's Performance of Services Indicator report shows that Australia's service sector is continuing to strengthen. Australia's financial services industry accounts for more than 8% of GDP. It's a diverse industry, but with growing competition and regularity requirements, it's also very active not only for investment banks and financial institutions, but in superannuation, managed funds, retail banking, and financial planning. Professional services is a very broad industry. It's also experiencing ongoing skill shortages for highly skilled and knowledgeable professionals, particularly within accountancy firms, where demand for experienced candidates remains as high as ever across all levels. From those with 1 to 2 years experience through to intermediate level candidates, through to managers within business services, tax and audit. In fact, talent shortages are more severe than ever, and there is no sign of this abating. Part of this comes down to organisations increasingly looking for efficiency improvements in response to disruptive technologies. Engineering, architecture, legal, marketing, and IT firms are also increasingly on the lookout for highly skilled professionals. Within commerce and industry, competition for talent remains high. Business partners who can consult with leadership teams to improve process, drive profits, innovate and steer the organisation towards growth opportunities are highly sought after. Organisations in industries such as manufacturing, construction, finance technology and other disruptive technologies are taking advantage of strong market conditions. With links between China and Australia at an all-time high, qualified and proven Mandarin speakers are required by many overseas multinationals with a presence in Australia. Within professional practice, demand for experienced candidates remains as high as ever across all levels, from those with 1 to 2 years experience through to intermediate level staff and managers with business services, tax and audit. Talent shortages are more severe than ever, and there is no sign of this abating. In a traditionally permanent hiring market, temporary hiring has become more commonly embraced, both within audit and business services, especially in the period leading up to and around financial year end. Another trend is the increasing appetite to widen the remit of all-rounder roles. For example, an assistant accountant who is also required to provide further core team support. The offshoring of large functions continues, except where the cost savings are not worth the resulting impact on the customer experience. This is forcing some organisations to repatriate these functions, which is increasing demand for proven accounts payable candidates. So in summary, the backdrop is one of increased demand for those candidates already in short supply. The nature of project work and the evolution of job functions will be the predominant driver of demand for both temporary and permanent recruitment over the following year. I've mentioned the use of contract and temporary staff a lot today, and I'd like to focus specifically on this area for a moment now. While non-permanent employees are nothing new, at Hayes, for instance, we've supplied temporaries for 25 years. The rapid rise in this form of work is. The newfound popularity of this long-standing method of employment is the result of several factors, that including a rise in projects and the attractiveness of a flexible workforce that can be released at short notice without financial penalty. But the Harvard Business Review research at the Agile Talent Collaborative found they're also being used to access difficult to find technical or functional expertise, speed, flexibility, and innovation. We're even seeing the rise of what's been dubbed the super temp. Those are highly skilled professionals and executives who've worked for the leaders in their field and now choose project-based roles. According to the Harvard Business Review, they're trusted to perform mission-critical work that in the past would have been done by permanent employees or established outside firms, and are on the verge of changing how business works. Employers certainly have a taste for headcount flexibility and aren't going to let it go anytime soon. In fact, we expect the use of temporary, contract and freelance workers to continue to escalate in the years ahead. We've published a range of advice for employers on the use of temporary and contract staff, from how to get the most from a blended workforce to tips for SMEs that have never used a temp before. So if you'd like to know more, please visit the website. Finally, I'd like to show you some of our best sources of information for the year ahead. The first one is hayes.com.au, how to get a job in 2017, as you can see at the bottom of the slide. There's a great selection of videos, podcasts, articles and blogs that tell you everything from how to get a job and how to manage your career. You can as well directly go to platforms such as YouTube, SoundCloud or LinkedIn and follow us to keep updates right on your phone or in your inbox. Another great source of information is the Hayes Quarterly Report, and that's launched at the beginning of every new quarter, with the next one to be released in July. Find out which skills are in demand and what the candidate trends in your industry are. There's more than 25 different reports available, so make sure you visit hayes.com.au/quarterly-report. So thank you for everybody who joined us today. I can see almost all of you are still on the call, so I trust you found the content interesting and relevant. I'd especially like to wish you all the best in your career and get into that top job. Please visit our website, hayes.com.au/salary-guide for more information, as well as our online salary checker. And feel free to contact me if you have any questions regarding your career or if you're looking for your next job. Here at Hayes, we have over 120 consultants nationally who specialise in accountancy and finance jobs, and I would be delighted to make the appropriate introductions. As mentioned, you'll shortly receive a copy of the presentation, and that will be emailed to you, and we'll now look at some of the questions that we've received during the call. Okay, so the first question that's been posed is, do you have any tips how to successfully ask for a pay rise? Surely one of the very important questions to us all. As I've shown during the webinar, 45% of skilled professionals say they intend to ask for a pay rise in their next review, with another 24% considering doing so. So the question obviously makes absolute sense. Australia's skilled professionals are certainly not shy about taking the initiative and asking for what they believe their skills are worth. But how do you approach it? I would suggest prepare a list of your recent achievements that exceeded your objectives. You may need to look back at your original job description and make sure you write a comprehensive list. I would also list any changed or rising work volumes or duties you're now undertaking and consider projects that you've been involved in. Then list the resulting benefit to the company of your results. The aim here is to provide strong evidence to support the value you provided. So focus on the outcomes that you've achieved. Then research the salary you feel your performance and results are worth, and I would obviously suggest consulting the Hays Salary Guide. This enables you to back up your request with evidence and demonstrate that the salary you're asking for is in line with the current market trends. I would ask your manager for a meeting to review your salary. When it comes time for the meeting, keep it professional, stay calm and focused, do not become emotional, and do not talk about how much money you need, such as rising bills or mortgage repayments. Keep your review purely professional. I would always suggest having a fallback position. If your employer cannot afford to increase your salary, can you agree a date for another pay review in, say, 3 to 6 months? And what about the additional benefits that they could offer to you? I would use your accomplishments and the value you add to the organisation as the basis of your negotiation. In this way, you'll clearly demonstrate your worth and you'll be in a far stronger negotiating position. So hopefully that helps. Another question we've been posed through the seminar is, can you elaborate a bit more on working flexibly within the accountancy and finance industry? Okay, it's a good question, of course. There are many jobs that require people to be based in the office or on a work site. But for those that aren't restricted to a particular location, flexible working arrangements without career consequences can have a huge impact on staff retention. Flexible working shouldn't come with any career limitations. Often these are the result of an employer or line manager making assumptions about the career motivations of the employee concerned. But each person is unique, with his or her own motivations and career goals. We should take the time to understand what those are so that any unconscious bias doesn't have career consequences for anyone working flexibly. If you'd like to have more flexibility, you're part of a group of 94% of Australians who would prefer to work flexibly if it didn't disadvantage their career. In a website poll we've recently done, just 3% of 3,248 skilled professionals surveyed said flexible work isn't on their list of priorities. The final 3% said they would not work flexibly because the financial implications would be too great for them. There's a great concern amongst Australia's working population that taking up flexibly will be a handicap on their career. But you should not assume your employer doesn't want to cooperate. You should make sure you have valid reasons to ask for it, such as you want to have time with your family, play sports, or attend certain development classes. There's evidence to support that staff working flexibly are able to work with more focus on their tasks rather than feeling burnt out. And flexible working is becoming more and more common with organisations. So my advice would be, don't be shy discussing it, but as with my tips on how to successfully negotiate your salary, make sure you have done your preparation. Be honest and pick a good and suitable time for your boss, and don't rush the conversation. So I'd like to handle the question one of you asked, which is what the fourth industrial revolution I showed could really involve in terms of niche skill sets. Well, the digital and technological divide between job seekers, skills and employers' requirements has never been greater than it is today as we approach the fourth industrial revolution. Of the new jobs added to our most recent Hays quarterly report of skills in demand, almost all require the knowledge and capabilities needed to utilize new emerging technologies and digital trends, from new systems to robotics, 3D printing to data analytics. So if you aren't continuously upskilling in new technology relevant to your field, you're behind the times. Change happens so fast that some of the skills now required hadn't been heard of simply a few years ago. There aren't many jobs or industries where technology isn't integral. With an overwhelming number of emerging new technologies, our advice is to narrow your focus to that area or that could be adopted into your field. No one can be an expert in every new development, so upskill in only those relevant to your job or the job you aspire to. According to the Hays latest quarterly report. A selection of accountancy and finance skills in demand include commercial analysts and senior commercial analysts with experience creating financial models and VBA programming, accountancy professionals with IT programming skills who can contribute to system improvements and automation projects, and professional practice accountants with new technology and hybrid skill sets. As I said, next week we will launch our new Hays quarterly report, so keep an eye out on our website to make sure you're aware of the latest skills in demand and market trends. So that's it from me today. Thanks for those questions. I hope my answers were useful to you, and I hope you've got a few interesting key learns from today's webinar. In case I haven't answered your questions, we will get back to you over email as well as send you today's presentations. So thanks very much for attending our webinar and have a great rest of the day.